All right, so we are recording. Happy Thursday, Thursday night training. We're going to make this party pop tonight. We're going to be doing some analysis, basically. We're going to just go through a few pairs, and we are going to do an analysis and determine some entries and that kind of thing. This is basically what we do anyway. And if there are any particular pairs you want to look at, we can do that as well. And then we are going to wrap it up. I know I say this every week, but I'm really, really, really going to try to stick to the plan tonight and get through what we need to get through. As always, don't hesitate to ask any questions that you may have as I'm going along. Sometimes I'll get going and then I end up in my own little world. So don't let me do that, right? Pull me out. Sometimes I got to get pulled out. So bear with me one moment there. Okay. All right. So what I'm going to do is share the screen. We're going to share our screen. Let's start on our trading view. Okay. So last week I was talking about how if you just purpose to mark up at least 15 charts per week, get in the habit of doing that per week. That's your engagement with the charts. However you break up the 15 is up to you, but you want to do at least 15 markups per week. And of course, the benefit of doing that is that you're really just developing your eye to price action, to market structure. And this is really how you kind of move away from the indicators. Now, I'm not opposed to indicators, as none of us are in this community. We have this awesome trading system, but you want to use that as a confirmation to what you've already identified. And of course, my MACD, I don't think I will ever not use that, right? I'm going to always have it. But you want to definitely get in the habit of doing that. So we're on GN. Let's look at GN on TradingView. I don't know who all uses TradingView, but I do recommend opening up a free account with TradingView and use this as your training ground. Use this as your training ground. And as you all know, I really don't do a whole lot. I'm just looking for specific things on the time frames that I'm on. Just specific things. Now, as far as the challenge go, I would definitely, recommend you start with the monthly and do a full top-down analysis. Now, for me, I don't do a full top-down analysis because I use my daily as my higher time frame. So I use my daily as my monthly kind of thing. As I was talking with a couple of students this week, and I was just kind of explaining the fact that honestly, I know I talk a lot about trading with the trend, but at the end of the day, we really count trend trading as well, depending on the time frame that you're trading on. If you're not basing your trade on the monthly, then at some point you're counter trend trading. And that's perfectly okay because you're trading with the trend within that particular time frame. And as I mentioned before, there are criteria that you have to adhere to so that you'll know what price is doing. Like you always want to know where you are. So you want to know if price is in a continuation or a correction, right? But within the time frame that you are actually trading, that is your trend, right? That is your trend. But at the same time, you don't want to lose sight of the overall trend. So if the monthly is bullish and the daily, for instance, is bullish, then okay, the daily is in a continuation to the monthly. That's all that means, right? If the daily is in a correction, meaning it's bearish, then obviously it's in a correction. But within that correction is a trend, right? Within that correction, and you're trading in that parameter. So with that, understanding, it's okay because you're still using your entry confirmations before you actually enter into the trade anyway. And if things are not lining up, we're not going to enter the trade. That makes sense, right? So we can actually do that
Yes.
safely. And our trading system really, really helps us to do that safely. Okay. But regardless of the system that you're using, if you don't have your entry confirmations, then it's going to likely be a problem down the road. Okay. So on the daily, the only thing that I'm looking for is my high and my low, right? And when you're looking at price, current price, just looking at, sorry, let me let it in. Just looking at what price is doing. If you come to the chart and price is at a low, right? You see a low point, you always want to look for a high point, because a low point could not be low unless it came from a high point. You always want to look and ask yourself, how did we get here? How did we get here? Right? And so when we look at this, and this is just some little in depth, I don't really even do all of that, but just so that you have more of an understanding. When I look at price here, this was a low point right here. So my first question is, well, where's the high? What caused price to come here? Well, where did that start? Did it start here because this is higher than this? Did it start there because this area is higher than this? No, there's a bigger picture here. How did we get to this low? That's the question that you want to ask yourself, right? How did we get to this low right here? We got all the way down here from a high point. So I'm looking left for my high point, right? My high point is right here. This was the beginning of this move, this position right here. This was the beginning, okay? So now that information is real pivotal, and it gives you a lot of insight, right? The first thing that it gives you is what? A downward trend. I'm sorry, right? Price scale down. Always looking for that trend move, right? So price scale down. That's your downward move. We can clearly see that, right? And so we reached a low. Now remember, I'm on the daily, strong structure, right? So we reached a low right here, and we had a reaction. We hit a level of support, right? And so now we see price reacting from that level of support, moving up. Now, because you drew your trend line and you see this move up, we can go ahead and identify that as well. We can identify that as well. Now, again, I'm just doing a little in-depth. I really don't do all of that, but I want you to kind of understand, get in the habit when you're doing top-down analysis and you're marking up charts. That's really what you're looking for. You're looking for explanations as to why price is doing what it's doing. How did price get here? So you want to kind of put on that investigator's hat so that you can determine what price is actually doing. Does that make sense so far? All right.
Yes.
Okay. So we have a low point right here. This becomes a level of what? Support on the higher time frame. This is the level of support on the higher time frame. This is my level of resistance on the on the higher time frame. This also can be looked at as what? Supply and demand, right? So once it reached that level, this is a key level, and then it starts to react up. Now for me, what I do is I drop down to my 15-minute. Now, can anyone tell me, because I've been saying this like over and over again, can anyone tell me why I dropped down to the 15? Why are we dropping down to the 15? And what are we looking for on the 15? Can anyone tell me why we dropped down on the 15? Why not the
You're looking for a
hour?
better.
I'm sorry.
You're looking for a better entry on the 15, or That's what I do anyway. Look for drop down to a lower time frame to get a better entry, and to um, go in the direction of your higher time frame.
Absolutely. Absolutely. And that's so pivotal. A lot of times, I get that question asked, why the 15-minute, or, some trade the hour, the 4 hour, and that's fine. That's fine. However, the lower the time frame, the earlier the move. And that is the reason why, we drop down to a lower time frame, because we want to catch that move early. But the higher time frame gives us the parameters in which that we're going to be looking for on the lower time frame. So we're not
Okay.
going to wait for the move to happen on the higher time frame, because we're going to miss the move completely by the time your parameters are met on the higher time frame. Oh, you don't miss that move 3, 4 times. You could have been in and out of that trade 3, 4 times before the criteria that you're looking for happen on the daily.
Okay.
Remember, that's 24 hours of buying and selling.
Can I ask a question?
Sure.
Can you do multiple positions, like on the 1 hour and the 15 minute?
Can you do multiple, like put two
Multiple
trades in?
trades. Yes.
Well, it's not recommended to do that, right?
Uh-huh.
It's not recommended to do that, because remember, you're trying to catch it early. So if you put your position in on a 15-minute, you have an earlier opportunity to get into the trade. It's counterproductive to put the same position in on the hour. So you're not looking at both of them. You're
Okay.
looking.
I kind of was talking about two separate trades. You're working that 15 minute, and you're working on a swing trader, the 1 hour or something. That's
Right.
not recommended.
Well, no, it's not. Well, let me just kind of rephrase that. So you're entering on the 15, but you can base your take profit on the hour if you wanted to do that.
Oh, okay.
That's how you work that. So the 15-minute is the entry. So now I'm in. I got a great entry. I caught the move at the beginning, right? That's what the 15 is going to provide you, the lower time frame. But
So you would have to have the account to run the pullbacks and everything if you're waiting for that 1 or 4 hour take profit.
yes, when you say you got to have the account, meaning being able to handle the swing.
Right, exactly.
Yeah, absolutely, absolutely,
Okay.
absolutely. And that's all about your lot size too, and of course the account, and the
Right.
lot size. Primarily that lot size. If you're not over leveraging your account, and which is based on your actual account balance. If you're not over leveraging that account, then you should be able to handle the swings. And so you would make sure that you measure that to make sure that if you're going to base your take profit on the higher time frame, the hour or the 4 hour, you know that there's going to be some swinging. You can potentially be in the trade for a few days, different
Right.
things like that. So you want to be able to withstand that.
Weather the storm. Okay, got it.
Hmm.
Okay.
Hmm. So yeah, that's a good question. That's a real good question. So the 15 is for the entry, but you can certainly use the higher time frame to capitalize on more pips. If you want to get more pips, you use the higher time frame. But you got in at the best time. See, if you would have
Got
entered
it.
in on the hour, you missed some move on the 15-minute if you enter in on the hour. But yeah, take your profit on the higher time frame if that's what you want to do. Yeah, great question there. Any other questions thus far? Comments? Alrighty. So now we're on the daily, and let's go down because I want to track the trend line. Let me change this color. Let's track the trend line. Okay. So let's go down to the 4 hour. Now, when we drop down, what are we looking for? We're looking to make sure, well, we're looking to see if price broke structure. Everything
Right.
is with that, right? So you have your daily trend line right here, right? And of course, what direction are we going in? What's the trend, right? We started at the
There.
top. So that's bearish, right? So this is a bearish trend line. So what that says is that overall, we're looking at a bearish market overall. But within the master, I call it a master trend. Within the master trend, you have what we call minor trends, right? Pullbacks. So there are other trends that you can identify. Now, this is one thing I wanted to point out too. Like I can see where we have some correction going on here. We got continuation right here, correction, and I can draw trend lines from here down, but I'm not concerned about the data back here. That already took place. I'm more focused on relative current price. I'm sorry. So I'm more focused on that. So I'm looking at this area right here. And what I'm seeing is a correction or a continuation. What is this?
Correction.
Right. So we're in a correction because the overall trend is bearish. Is bearish. And when we drop down to the lower time frame, we're just checking to see, did price break structure? Did it break the major structure? No, because we're on a 4-hour now. Did it break the major structure? No, it did not. Did it break the minor structure? It did not. So if it did not, we're still in that move. We're still in that direction, right? We're still in that direction. Now, you also want to keep in mind is that what if it did break, right? Anytime price breaks structure, it's telling us something different. It's telling us that price may want to go in a different direction. So you always want to stop if price breaks structure, which is a good thing actually, right? It's a good thing because now it made a move. It played its hand. But when it breaks structure, it's telling us basically that I'm potentially getting ready to change course. I'm gonna change directions. But if it hasn't, we're still gonna move in that direction. We're still moving in that direction. And as long as price is contained within the trend, then that's the position that you should stay in. If you're selling and price is under your master trend and you're selling, then that's what you want to do. Now, this is really good for swing trading as well. If you're going by the master trend, right, which is the daily in this case, and it's bearish, and you put in for a sell position, right? As long as price is under that master trend line, you still can be in that sell position. But now here's the thing. This is swing traders now. This is swing trading now. So of course, on the daily, you got a lot of pullbacks, right? A lot of corrections. But what direction is it going in? See, I'm still pulling down. I'm in a sell. I'm on the right side of price, but I got to pull back, right? Came down, right? This one was rallying up, but then it hit the trend line again, and what? It started dropping from there, dropping, right? So that goes back to making sure that your account can handle the swing, Oftentimes, when we have pullbacks and such, we get nervous and we like, okay, I'm gonna get out or what have you. Or if you over leverage your account can't handle the pullback. Either way, it's not a good day. To avoid that, you operate within the trend, within the parameter. Because as long as pullbacks is just making you nervous, it's trying to psych you out. What tells you that you're on the right side of price, and what gives you confidence that you in a good position is if price doesn't break structure. That's it. No matter what, price can do all kind of stuff under this trend line, and I wouldn't care because it didn't break structure. Now, what gives you a greater advantage as well is your entry. So if you entered somewhere up here, it don't matter. You're in good profit, right? Somewhere around in here, you would have been either a little bit of drawdown or at break even, and then it just fell from there. So entry is super, super important when obviously, when you're putting your position in, and getting in early on the 15-minute, somewhere around in there would have given you a early entry, and you could just ride it down. Does that make sense? So those are just different ways that you can look at price in a simple way, an easy way, and a confident way. A confident way. Let your structure will give you confidence because price always respects it. It respects it, right? Now, if it disrespects it, meaning it breaks structure, guess what? Price will come back and retest that same structure and rally off in the other direction, right? So it's still respecting it, whether it's on the inside or the outside of it. So if price breaks structure, we're looking for it to come back and retest because most often, there are some exceptions, but most often when price breaks structure, it always retests. So that is something that you want to keep in your data bank as well. When price breaks structure, wait for the retest. Wait for the retest. Because when price comes back to retest and it does not break it going back in the previous direction, it's absolutely going to rally in the opposite direction. Did that make sense? That sounded kind of confusing when I said it. So let me give you an example of price breaking structure. So let's draw a trend line here. So you know the rule of thumb for a trend line is 1, 2, follow through. Don't worry. All right, so we have a trend line going down here, right? And price, let me pull it out so you can see it better. Okay. So when price actually broke, right? Price broke here. All right. And this has happened to be one of those times when, remember, I just said most often. Most often. Okay. Slight little teensy weensy wick. And that's why, and that's another thing you want to keep in mind. Price moves in waves, right? You always want to identify a zone if you can, because price will move relatively, for the most part in the zone. But so price did break just a hair right here. And then it came back down. I don't think I would have counted this particular candle. Let's open it up some more so we can see more of it. I like to see a little more of the body breaking. It did break, but a little clip of the body broke this trend line. And then this candle came down and there's a little wick and it's right in the zone, right? Sometimes, especially when you're doing pending orders, price can come a hair to your entry and pull the other way and don't put you in the trade, right? This looks like this could have been one of those scenarios where, it was a hair, but that's why you want to operate in zones as well. So, so typically it will break and retest and then go the opposite way. Now, if it broke structure, if price breaks structure, and when it comes back down to retest and it breaks back below, then we're still in close. Keep in mind it needs to close. Then we're still in an overall, downtrend. Because what will typically happen is price will break because it always retests in the zone, right? Letting you know what it wants to do. If it retests and it don't break above it, then price wants to continue to go down. If it retests above, right? It breaks above, retest, but it doesn't break it, price is going to go up. And that's typically what happened here. And as I go along, if I can find another one, I'll point it out. But does that make sense? Can you see that, how that works?
Mm-hmm.
Yes.
Let's see.
Yeah.
Can I ask a question though?
Sure.
The trend line that you just drew at
Right
almost current price. No, almost at the current price.
right here.
Right. I guess the way I'm kind of looking at it, I mean, I understand why you drew it that way. Could another trend line have been drawn from I don't know, to the right of where your cursor is currently at, to the top,
Up here,
like an inner trend line? No,
like up here.
no, from inside on the yellow, now back up, an inner trend line. Yeah,
Up,
yep, yeah, like from right there all the way up.
right now, the question would be, what are you looking for? Like when you, if you was to draw that trend line, my question would be really why?
Right.
What am I looking for? Because you're not just drawing lines to draw them, but you want to have reason what you're looking for. So I want, for me, no, I would not, and here's the reason why. I'm sorry about that. So that's what you're talking about,
Yes.
right? So
Yes.
so the question would be why. Now, I would not, I would not draw that line because this line right here is enough for me, but the distance between where price is and where this line, where my trend line is enough. I already know that I'm in a correction, right? I'm already in a correction. I'm on a 4 hour. So price has to be able to move. So me drawing this trend line, I don't really see the point in it. I don't know what I would be, why I would be drawing that trend line, because this trend line here is where I want price to move within. I want to gauge what price is doing with this trend line. So if I drew this trend line here, am I looking for it to break and do what?
No, I think what I'm thinking in terms of drawing it like that
Uh-huh.
is is with the inner trend line. I mean, I get exactly what you're saying, and I see the reasoning behind it. But at current price right now, let's say price continues to go up and hits the backside of that inner trend line,
Which
right?
would be right at the top of
Right,
this
which would be
master
right
trend.
there. So would you, I mean, if I was looking at it, obviously I know almost nothing in this thing here. But if I was looking at it, I would be looking to take the trade right where you're at, or will you be waiting for a break of the original trend line to take the trade?
No, I wouldn't. I wouldn't. But it's interesting. Like, so you're saying when price comes up here,
Yes,
right? Now remember, it's the top of this yellow trend line, but it's also at the top of this overall, this master trend on the daily, this white line.
right,
So again, this trend line wouldn't be necessary. So when price comes up to this master trend line, that definitely would be a position for what? For a drop. It would be a position for me. I'll be looking to sell the market at that point.
okay. So
Yeah.
you will not be looking to sell at the break of the original trend line, but at current at where your cursor is currently at.
Yeah.
Yeah, but not at the break of your original trend line.
No, not at the break. Once price gets to, let me put a little eclipse on that. So once price get right up in this zone right here, this would be the area that I will be looking to drop the market. Now, of course, remember we have multiple confirmations, but
Yes.
this is the area that I'm particularly looking at for potential sale. Now, if price broke and closed above it, I would not make a move until I get a retest, because that
Right.
retest is a confirmation of where price
Breakout.
wants to go.
Right, of a breakout of the of our original. Right. All right. Thank you so much.
Right. So now what I want to point out is you have the breakout, right? And it closed above the trend. But now I'm looking for a retest, because the breakout, okay, that's telling me one piece of the puzzle. I may want to go in a different direction. But that retest to the line price coming back, that
Right.
confirms that I'm going in that
The
direction.
breakout. Right.
It confirms
Right.
it. And of course, we never want to get away from looking left, right? We want to look at past performance. We want to look at past performance. I like the lines better. So let's just put a,
Wow. Structure.
boom, 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 boom.
Structure.
It never fails. It never fails, ever, ever, right? So you said it there. You got that structure right here. So that, now what does that tell you when you've identified this? Now what feeling do you have? Look, it's confirmation that price reacted here. This is a key level of what? If you're going up, it's a key level of resistance. If price is coming down, it's a key level of support. So, you know, support right, resistance right here, support right there. So that's even stronger confirmation that price will likely react here. Does that make sense?
Thank you. Thank you.
You're more than welcome. And another thing too is, I mean, less is more, but until you really get it. So I am not opposed. And I recommend, listen, do what you need in order to see it, to get the clarity. But then I also caution you not to overload, because then it becomes chaotic and you don't know what you're looking at, right? Oh my. Okay, good. No feedback. No feedback. So where are we? That's the 4 hour, right? So that is the 4 hour. And then on the, let's clean this one up here. Okay, so as we drop down, what we're looking for, did price break structure? Is price still holding on the structure, right? So are we still in a correction? We're still in a correction on the 1 hour from that daily bearish trend. It's still correcting, okay? And we got down to the, it's nothing to do here. It's nothing to do here. And now that we're on our entry, time frame. So where am I taking price? Where would I get out? Where would I get out? Now, first off, let me just go back. Remember when we started on the daily, this is our key level of support. So for support, we should be only looking to buy. From resistance, we should only be looking to sell. So right down in here is where your buy would have been, right? Well, ideally, because the truth of the matter is we all come to the market at different times, right? And we assess what price is doing at the time we get there, right? So in this case here, we have, those are entry confirmations. I mean, entry points, potential entry points. So these are different entry points that you could have gotten into the position. So maybe you was working, maybe you was asleep, maybe you just didn't see it. Then you had this opportunity right in here, and then in this opportunity right in here. But nevertheless, what are you looking to do? You're looking to buy. See, the thing is, the first thing you want to determine is what position am I taking? In order to make that determination, you start at the higher time frame and you identify what? The trend. Whatever that trend is, that's the position you want to be taking. And so we've identified that here. 3 different time frames that you could have, or opportunities, I should say, that you could have taken that buy position. Now, bear with me. And obviously, where are we taking it? Like when you get in a trade, you need to know where you're going, right? That needs to be identified, where you're going. And that also helps you to just really get in, get what you came to get what you came for in the market, and get out. Don't worry about what you may have missed oh, it skyrocketed after I got out. It's okay. It doesn't matter. You got what you came to get. You got what you came to get, but you can't really identify what you're trying to get if you don't know where price is going. Does that make sense? Got to know where it's going. So we can clearly see where price is going. Am I right?
Yes.
Can we can clearly
Yeah.
see where price is going. Price is going here. Going right up here. Right here. And guess what? We're going to be sitting there waiting. And once it hits the line, bam, we got what we came for. I don't care what price does after that. So if we would have got in down here, which would have been the best, one. What's this on the 15-minute? That's too many pips on 15 minutes. Oh, but this is GN too. This is GN. No, this not right. That's not 400 pips. Is that 400, over 400 pips? Am I on the 15? Yeah, I'm on the 15. I mean, GN is definitely one of those highly, high volume pairs. Wow. That's a lot.
And that's a 400, 300, 400 pip move, Janice.
Wow. On a 15-minute chart.
Yeah.
Yep.
Wow.
Because it's a G pair.
Yeah.
That's what it is.
Yeah.
You know what, Janice? When I first saw Forex, GJ used to move like 400 pips a day.
Yeah.
That was about 7 years ago, a day.
Yeah. Yeah. I could believe it. Absolutely. Because I used to trade GJ. That was my pair, but on the hour. But yeah, they are all of the Great British Pounds. They have very high volume pairs. That's great for a 15-minute though, or the 15-minute chart. But my whole point is, knowing where you are, where's your entry points, and you're not just arbitrarily saying, you're just not picking it. Like, oh, I'm gonna pick this. There needs to be a reason why this is an area that you're looking to enter the market. And it's always going to be based on market structure. Always going to be based on market structure. And this is our TP we're getting out. Now, where would your stop loss be? Where would your stop loss be? I mean, because it's clear now you have structure on your side, right? So the first off, we know stop loss is always going to be in the opposite direction, of the position that you're taking. And if price is bouncing off this trend line, it has not broken structure. Then I definitely want my stop loss to be below it, right? In a safe zone. So what you want to do, because remember, this is your support. So I would go below my support. Now this is a Great British Pound pair. So you want to make adjustments for that, because a wick can wick you down and stop you out and don't even close below, don't even break structure. It just wicks you, out. So I like to give it some room for a Great British Pound pair, 10, maybe even 20 pips, 10, maybe even 20 pips below your key level of support if you're buying. Below your key level of support if you're buying. Now, I wouldn't do it over the trend. Now, it also depends on when you get in. Now, at this point, if you was to get in, it would be, about 20 pips below the key level of your support. If you got in here, you'll make the adjustment. I would still, based on what we're looking at, I would still stay under my support line here. But if I was to get in here, then I would be above my support, but below my previous low. This is the previous low. So if I was to get in here, I'll be looking at my previous low and I will go below that. I will go below that. Why the previous low to the entry? Well, when you look at this, the low here, this low did not break this low. I know this starts to sound a little, but you looking at what did price do prior to where you currently are. That's the questioning that you want to ask. So if I'm looking to get in my position here, my question is, well, how far did price go prior to this point? Well, right here is my low. Right? So let me stretch this out. So you see price under my trend line?
Mhm. Yes.
Let me open it up. Right? See right in here? Yeah, I wanna definitely go below that. I want to go below that. Because what direction is price is making what? Higher highs, right? Higher lows. Higher highs up here, higher lows. Clearly price is moving up. So if I'm getting in around this area here, I'm looking left to see how low did price go. And as far as my stop loss, I want to make sure I'm below that. And I'm comfortable with that because this is a higher low. So this is your first low, right? And this is your higher low. Why? Because this low is higher than this low. So I want to go below here. I hope that didn't confuse anyone. Any questions thus far? Higher highs and higher lows is a uptrend. Lower lows and lower highs is a downtrend, right? Now, again, our system is great because it really just identifies all that stuff for you. However, just having a fuller understanding is always going to be best. Okay. So let's jump to another pair. Any questions on GN? GN?
Hi, Janice.
Yes.
Hello.
Yes, ma'am.
Janice, how are you?
I'm good. How are you? Who's this? Your voice is familiar.
It's Tembi.
Oh, okay. I haven't talked to you in a while. Good. I'm glad you're here. I'm glad you're here. You had a question?
Yeah. And when to exit now, Janice? Okay, you entered in all these what you call trades, and when to exit?
Well,
it's gonna depend on the pips that you want.
Yes. So if you have a specific pip count, say 20, then you would get out at the 20 from your entry. You'll count your 20 pips up. Now on here, of course, we use our measuring stick. So if I was to get in here and you just go up 20 pips and that price point look left, that would be the price point. On MT4, is our crosshair, and we just hold it down and drag it up for the same, it gives you the same information if you want a specific pip count. If you are trading based on structure, then you would have identified. Now, if you got in here, maybe you don't want to go all the way up here. Maybe you're not trying to, take it that far. Structure is all over the place on here. And when you identify structure, those become your potential take profit areas. So right there, we got structure. Price came down. There's another level of what? Support. Look at how price reacting off of this line. Reacting off of this line. Now, eventually it will break through, right? You break out and you retest, right? You break out and you retest. Come back up, and now it's what? Resistance. See how it bounced off?
Mm-hmm.
So if I got in here, I could have used that area right there as my potential take profit. That would have given me 91 pips.
91. Okay.
Yep. So you can use structure to determine that. Now, if you use structure, you have to identify it. And those are definitely areas that price is going to respond to. If it respond to it in the past, it will do it in the future, but that doesn't mean it won't break out. I'm not saying it's not going to break out or it will break out. I'm not saying that. I'm saying it's going to, 9 times out of 10, it's going to react to that area.
Okay.
And that's perfectly okay, because we're using that as our take profit areas. We're not going to wait and stay in the trade, right? And not really know what price is going to do when it hit that line. What we do know, though, is that it will likely react, meaning it's going to pull back a little bit. It's going to struggle a little bit. Now, the question becomes, is it going to continue going in my direction, or is it going to pull back and put me in drawdown? So we don't want to take that chance and play against that probability. We just use those key areas as our areas where we're going to take profit.
Okay.
Yeah, that's
Okay,
if you're basing it on
thank you.
structure. You're welcome. That's if you're basing it on structure. But the other alternative, Thimby, as you mentioned, is you can go for your measured amount, 20, 30, 40 pips. Measure that out, coincide with the price point, that becomes your take profit.
Thank you, Jenny.
You're welcome. You're welcome. Okay. And so let's take a look at another pair. Any other pairs? Anyone in particular want to look at? Let's look at NZD, USD. All righty, who is going to walk me through our setup? Yeah, I thought I wasn't going to ask for a volunteer. Okay, so on the daily, what are we looking for on the daily? Anyone? What are we looking to do on the daily?
Establish support and resistance area.
Yep, our high and our low relative to current price. Clearly like there and right here, right? Okay, so we have done that. So now where price is right now, we're in a basically going to our supply zone, right? So we're moving up. Now the question becomes, how did price get here? What caused price to get to this point, right? If there's a high, there has to be a low, and vice versa. So we look left. So price, this move right here created this move here. When price dropped to my key level, this is a key level of support on the daily. When price hit that key level, it created this move right here. Simple stuff, right? It created this move right here. So on the daily, for NZD USD, what is the trend? Is price making higher highs and higher lows? What is price doing on the daily?
It's in an uptrend.
It's in an uptrend. Absolutely. It is in an uptrend, right? So now this trend line right here is our daily trend line. Is our daily trend line, right? And then when you drop down, now just so you all know, basically what I do at this point is I just go to the 15, but I'm going to the other time frames just so that you can see how price moves within the trends and the support and resistance lines that you've established on the higher time frame. Okay, so with that being said, we're going to go down to the 4 hour. Now on the 4 hour, what am I looking for?
You
Make
want
sure
to
the
see
structure-
if price is respecting the trend line.
Absolutely. That's all we're looking for. Is price still respecting the trend line? And if it is, then we're still in that direction. If it is, we're still in that direction. So if it was bullish, the trend was bullish on the daily, the 4 hours still is in what? Overall, is still in a continuation overall. Now you have smaller moves within the overall trend, but overall it's still in a continuation.
Mhm.
Right? So then now I think that was David who talked about the trends within the trend.
Yes, ma'am.
So this would be an example of what you were speaking of. And this also can serve as a confirmation if price, again, it all depends on what you're looking for. Now, this, I have to say, is more than what you need to do, honestly, because if the trend is bullish on the daily, I'm looking to buy on the lower time frame. Really, you know what I mean, Dave? So if I can do that, I can clearly identify it. If I'm looking to buy, then it's still above my trend line, so it's still respecting it. So if price comes out of this trend, breaks structure and close, I'm looking for a retest. If it retests, but it does not break back above, then I know price is going to drop. So if you're looking at it for that type of confirmation, then I can see that being necessary. But as long as it's respecting the overall, the trend, I just roll with that. I just roll. I try not to do too much, but just understanding what you're looking for. At this point, on the 4 hour, that could be some nice pips. So it could make sense for you, right? If it breaks, retest, that's 270 pips to the downside. If it made that move. If it made that move. If it made that move. So if it breaks, right, and then it retests. Sorry, that's my TV. Okay, so if it breaks and then it retests, guess what? Retaking the market where? Back to this trend line. That makes sense?
Yes, and I mean, just in addition to what you just said now, even on the 4 hour, the inner trend line cool since already we've already established the on the higher time frames. So the inner trend line could even be quote unquote a continuation area. I mean, who knows? I don't know.
Well, no, it could be a continuation. Well, no, because the trend was bullish, right?
Right.
So this, yeah. So you talking about this one?
Yes. So that when it pulled down, like the highest point that it was at before it came down towards that towards that inner trend line, could be either an additional entry point, or obviously nothing is guaranteed.
Right.
That it comes to that inner trend line that is going to continue going up from there, but it's looking more like an additional confirmation of some sort. I mean, depending on all the other confirmations.
No, you're absolutely right. Always confirmation, because it's telling you something. Now, it's telling you something. So it's always a form of confirmation. And because if it does pull back the other way, like I said, that was over 200 pips. And you can use this inner trend line to determine if that's what price wants to do. Because it would have to break, it would have to retest, and then it will likely drop, because that's what that retest is telling you. But if it stays above it, then you just continue to ride that up. You continue
Yes,
to ride
ma'am.
that up. And
Yes.
you mentioned entry, so I want to make that point too. for re-entries. This goes back to what Calvert and I were talking about at the beginning. Re-entries is very important that you follow in structure. You got to identify that structure really, really well before you re-enter into the position. If you're buying, you want to re-enter. Remember, we buy low, sell high. So if you're buying and you want to re-enter into the position, you must be re-entering at a support level. That's very, very key. You don't want to re-enter into a buy at a resistance level because you high. You don't want to buy. That's like buying on sale or buying full price. You don't want to buy full price. Full price is at the high. The sale is at the low. So our trend lines help us to visualize the low. And that's based on structure. So this trend line, this inner trend line right here, these will become our entries, potential entries, right? Potential entries. Potential entries. Why there? One is at a support. This trend line, it came down, so it's at a support. That's the position that we should only be looking to buy from, right? And two, it didn't break that trend line. So if price comes back down in this region of the trend line, our expectation is that it's going to continue to go up. Why? Because it did it here, it did it here, and it did it here. But like David said, it could break through. And if it does, no worries. Now we just sit and wait and see what price is going to do. What move is it going to make? And what we're looking for is a break and a retest. If it breaks and retests, it don't break back above, then we're looking to take the market down. Well, that's what price wants to do. Take the market back down. Right? Now it can certainly break, close, and it can come back up above your trend line and close. And that was just a fake out. That's to rattle you. And trust me, it rattles a lot of traders. It shake them up. And that's the broker. The broker's like, okay, let me shake this bag up a little bit, see who I can get knock out the game. And how they do that is spiking the market. That's how they do it. But remember, price always respects structure, and it will go back to it. That makes sense?
Yes, ma'am.
Any questions thus far? Questions?
Janice, just I want to ask you a question.
Sure.
The big arrow, because we had a big arrow now at the moment in the NU.
Okay.
So the big arrow is not valid until we break the trend line, isn't it?
Right. Well, the big arrow, it depends on a higher time frame. The big arrow, we're not really looking for a break. The big arrow just indicates to us that price wants to go down. So we go to the lower time frame to get the extended version of that big arrow of where price is. And then of course it needs to meet the criteria.
Yeah.
It needs to meet the criteria. Did that answer your question?
Okay. Yes.
Okay.
Yes. Yeah. Thank you.
Yeah. So on the daily, you know, if you just have a big arrow, then it's still in an overall, if it's a bearish big arrow, it's still in an overall bullish trend.
Yeah. Okay.
Yeah, because you need more, you know, data.
Yeah. Thank you.
And so now what we're going to do is drop down to the 15-minute. I'm going to do one more, and we're going to call it a night if you all don't have any questions. And this looks kind of crazy. Okay. And I'm sure I act that. So because we've identified these key levels on the higher time frame, we're just waiting for price to reach those levels on the lower time frame. That's really all we're doing, right? So we're at the, and as you can see, it's easy to get lost in the market. That's why I try not to have too much stuff on here. So we're looking just on the 15. Is price respecting structure? Yeah, price is still doing it. So overall, price is what? Still bullish, right? Overall. And you can certainly draw other, trend lines if you want to just kind of work your way down, get some clarity going on. And when you're drawing your trend line, you don't want to, when you do 1, 2, follow through, but you don't want to cross over candles, right? And so sometimes you just have to play with it until you can get what you're looking for.
Real quickly, that trend line that you just drew right now is almost like the breakout and coming back to test before it started going up that you were trying to explain earlier.
Mm-hmm. Yeah, but
no, not there, where you had it before.
Like right here.
Yeah, right. So it broke out and then it almost came back down to test the back line of that trend line before going up.
Right. So it broke out, which is right here.
Not there, not there. On the lower side, it broke out. On the lower side of that trend line.
Right here.
Yeah, it broke out, then came back almost to test the backside of that trend line if you had it, of your new trend line.
Gotcha. So okay. So it broke. You saying it broke out?
Yeah, right.
Came back. It came back. Mm-hmm.
Yeah, if you had extended that new trend line, it's almost like breaking. Yeah, like testing the backside of it.
Yep.
Yeah.
And did exactly that.
Yeah. Yeah.
But I don't like this trend line though.
Oh yeah, I know.
Because I don't, this crossover. This crossover, you don't want to cross over like that.
Yeah.
I would be going here. This would be my trend line. And same thing though. Look at that, David. You see that?
Broke out, came back and test.
And retest. Now, where do you think price is going to go?
Up.
Come on now. That's what I'm talking about. That's what I'm talking about. A retest is confirmation of the direction it retested on. If it retested from the top down from a support level, which is right here, because this is the low, right? It's going to pull back up. And let us extend it out. And it's just playing around. So just know when you follow structure, the brokers can't really rattle you like that because you're not making premature moves though. You got to keep all that in perspective. Provided you're not making premature moves and you're following structure, when the brokers, shake the bag a little bit, all you got to do is just sit and wait because it's always going to come back to structure. And once it respects structure again, then you can resume in the direction that you're looking for. So yeah, that's where we are. That was a good one right here. So I do exceed price now, and this is another reason why. You must have other confirmations as well. Now, when I look at my MACD, right, my MACD is indicating that we're still we got some bearish pressure here. You see that? We got some bearish pressure, and obviously we do because, our candles let us know that. But from the perspective of it breaking, based on our MACD, it looks like it may, if enough bearish pressure begin, it may break through. That's why we have other confirmations that we use to make those determinations. Okay. Now here's the thing. My MACD, it can curve right on up or it can go straight down. That's why you have to wait. Reacted here, pushed up, came down to close to the area, pushed up. Look at that right here. Nice structure respecting. Now remember, the lower time frame, the lower the time frame, the weaker the structure. So the breakouts are more prevalent on the lower time frame than the higher time frame. So keep that in mind also. And you're starting to see a little reaction going on. So these are the things that you want to do as it relates to market structure, identifying it with your highs and lows and your trend lines. You don't need a whole lot of trend lines because it really does get confusing. Your master trend line, understanding what position you're taking. Always take your position off of the higher time frame trend. Does that make sense? Any questions about trend lines, support and resistance? Any questions at all?
Miss Janice?
Yes, ma'am.
Hey, it's Keisha.
Hey there, Keisha. How are you?
I'm good. I didn't think you guys were still on here. And I was like, oh my goodness, she's still live. Hey, so I have a question. So I pretty much just use the Simplicity and just trading like the after, you know, the London push and stuff. And I have a question about, like, I know on your trading plan it says like look at the daily, the big arrow to see the direction and stuff, and I only look at GU, and it seems like the daily arrow for GU has been a sale for like forever, but GU has been buying. And like, and so I guess maybe one thing I shouldn't do is mix two trading plans together.
Oh, please
maybe
don't.
that's one problem.
Yeah, no, you don't want to definitely do that. But here's the thing.
It's like,
there's a reason for that, though. You're right. Don't mix two plans together. That's trader suicide. But there's a reason for what you're seeing on there. Can y'all see my Simplicity screen?
No, I don't see it.
No? Okay, sorry.
Mm-mm.
Let's go to the deal. Okay, you see it now?
Yeah.
All right.
You can see it.
Okay, so talk to me, Keisha. So we're on the daily, and this is GU.
Yeah.
And
right.
You said
a big
it was
arrow going down. Right. And that's been like down for like I said, at least a week or so. Like it's been a down arrow.
Right.
So so here's what happened. And yeah, like today, like so I usually wait until I get up about 1:30 my time, which is like I'm in Pacific, which is about 3:30 or so. And so this morning, so GU kind of consolidated. I ended up going to sleep, and I woke up about 5 a.m. and I usually look at the 30-minute, so I'm like 30-minute to hour time frame. There was a sale arrow that came up, a sell signal that came up, and everything lined up. And I really thought that it went in the opposite direction because Powell spoke. But when I looked at the structure, I was like, well, it just hit a major support and just started, to buy back up, as opposed to, my thoughts that, oh yeah, Powell spoke and took the market in the opposite direction. It's like, well, that's probably not what happened. So are there other confirmations that you use, like, or when you use Simplicity more so?
Yeah, I do actually. So on the daily, because you mentioned that, the bearish big arrow has been there for a little minute, but it's still buying.
The trend is definitely strong buy.
Right, but there's a reason for that. Now, you can look on the daily and see why. So remember, the first thing I do, I do the high and low, but when you see a trend, identify it. Right? So clearly we do have the bearish big arrow. We do have the bearish big arrow, but where is price going? What direction is it going?
It's going up.
Right. So that explains why. There's a funky trend line, but clearly, okay. So clearly on the daily, price, despite the bearish big arrow, price is bullish. The trend is bullish.
Correct.
So that answers your question in that why it's still going up, because it's still overall bullish. And let me see if I can stretch this out a little more. Though we have the big
Is it?
arrow,
Mm-hmm.
you see my bullish candle, we still pushing up.
Yeah.
And it's just going, if it breaks the previous resistance, it's just going to move the arrow. It's just going to keep moving the
Gotcha.
arrow. And that's pretty much what has been happening.
Okay.
So now for me, but now remember, it is the daily, right? And so we're going to see an expanded view on the lower time frame. So we'll get a clearer view of what price is doing. So because we know that it's still overall bullish, you can position yourself for a buy. Or you can wait for the sell setup to take place on the 15-minute.
Okay. So one thing to do is to either just focus on whatever the bigger trend is, which is a buy, and so just focus on taking buys. Because that's one. I guess that's one thing. Now you said on the 15-minute about sales on the 15-minute.
Right. So let me clarify on the daily. It's definitely bullish. The bearish big arrow is telling me that we are at despite the fact that it's bullish, we are at a key level of resistance. But price can still keep trying to break it. And that's basically what's happening. But as far as my trading plan goes, if I see that bearish big arrow, then I'm going to be looking for a sell. That doesn't mean I'm just going to jump in. It still have to meet the sell criteria, entry criteria before I get in. So what I do is I drop down to the 15-minute. I'm looking for a sell. And the first criteria is it needs to be in my sell zone, right?
Okay.
And I'm not concerned about the big arrow on the 15-minute. I'm only concerned about price. So price needs to be in my sell zone. And then, of course, it needs to meet it across my 13, my MACD, my other confirmations have to be met. But this also indicates, you see how we have the activity pushing down, but it's really, it's still around this, still around it. It hasn't really clearly broken into, a good push down, because it's struggling. The sellers are struggling against the power or the volatility of the buyers. And that's why you see it still hovering around my supply zone. It hasn't really taken off yet, right? Because it's battling with the buyers. So what you have to do is determine, what position am I going to take? Am I going to take a buy or a sell? And that, but whatever that is, it needs to be based on the trend of the higher time frame.
Gotcha.
That's the key. That's the key. If you use the monthly, it's fine. The monthly is bullish. And it's in what? It's in a continuation. So we got, this is why we see that bullish pressure. But now, what do? Let's look at some structure. Let's look at some structure.
Gotcha.
Let's look at some
structure. That makes sense.
That makes sense?
Yeah, because I think now I'm really developing, like, what kind of trader am I? I'm kind of in that phase of, okay, Keisha, what kind of trader am I? And it seems like I've, I cannot get away from, like, the trend is your friend until the end, right? It's like, okay, if you were in a buy, you know what I'm saying? Like, the trend is your friend until the end.
Yes.
And so, so when you go against the trend, and that's what I was looking at, taking the sale, it's like, okay, that's not the trend, so that's not your friend.
Right.
So,
and that's, and of course, and you're right, it is. And that's, if you're going to use the monthly, that's fine, as long as price on the lower time frame is in alignment with the trend on the higher time frame, and you're good to go.
Makes sense.
And then you want to identify structure. You always want to know what price is doing, where you are, and just these two lines that I put here, resistance lines here, we see the structure. And where's price? Let's first look left and see how often it touched. So price came down, hit it, pushed up. Price came down in the zone, in the area, pushed up, vacillate, pushed down, vacillate, and then did what? Pushed up. So now price is here right at that same point. And this is the reason why we have the bearish big arrow, because price is on the monthly is at a key level of what? Resistance.
Resistance.
So it's
Gotcha.
pushing price down, which is why we see the bearish big arrow, the bearish indication, the little bearish moves happening on the lower time frame.
That makes sense.
Yeah. So
That
now
makes
if it
perfect
breaks
sense.
out, if it breaks out, we know this is the next zone. If it breaks out, right?
Right. Gotcha. Ooh, that makes sense. Thank you. Thank you.
You're
That helped a lot.
welcome. You are welcome. Any other questions before we wrap it up? Comments, questions, additions to?
Now, I do have another question no one else does.
No
like,
problem.
you're like,
No
Keisha,
problem.
you're 2 hours later, girl.
You're fine. You okay?
I'm in Seattle, so I'll be seeing stuff. And I'm like, oh, wait, they're still on.
No, you're good.
Now, in the New York session, because like it's usually earlier for me, like it seems like Simplicity is not really a good tool for New York session.
Really?
Or am I just not? And it may just be I've gotten so stuck that it's a reversal trading system, and seem like whenever I get into like if like there's because I have the scanner and stuff like that, and like it sends me stuff, but I'm so scared to take them because I'm like, usually it's like a reversal. I'm thinking like, okay, well this is just calling a reversal.
Well, it's definitely good for all time frames. Anything you can ever think of trading. The Simplicity is definitely good because it's market structure at the end of the day. Whether it is identifying reversals or not, it's still going to boil down to your trading plan. You're still not going to execute the move unless price has met your entry criteria.
Gotcha.
No matter what it does, right? Remember, we're in control. And see, that's why it's important to have a solid trading plan and your entry criteria, because that's your demand on price. That's you saying, if you don't do this, I'm not going to play with you, right? I'm not going to play with you. But price always, it will meet the criteria. It's just a matter of waiting. So it really don't matter what session it happens to be. Just follow the trading plan.
Gotcha. Okay. Thank you.
You are welcome. All
And
right.
real quickly, Keisha, if you go back not last Thursday, but the last 2 Thursdays, if you go and look at Janice's videos about looking at the higher time frame and then going to the 15-minute time frame, I think it will give you, at least it gave me, I mean, I probably watched it 4 times, but it gave me a little bit more clarity.
Good.
Okay. I appreciate that. I will definitely do that.
Good.
And Janice, why is it that when I'm looking at the chat, they don't tend to come up like when I'm listening to you looking at them?
Say that again.
I said, why is it that when I'm looking at the chat by myself, they don't seem to come out as well as when you're looking at them?
What, the chat?
No, it was a dry joke. But
okay, maybe it was too dry. No. David, you said it was a dry joke. Oh my gosh. David, don't worry. David, it's all good.
No, all I'm saying is, I mean, when I'm looking at the chat by myself, I don't tend to see all these things. But when I see you, or I see Uncle Max, I'm like, why didn't I see that?
But you know why? It's repetition. I promise
Yeah.
you it is. I promise you. And that's why I just stress we have our meetings on Thursday once a week. That's not enough. Like, you got to be in this thing every day, right? 15 markups a week. I promise you, you're going to see exactly the same thing that I'm seeing it with ease. With ease. It's just constant. So now, are you engaged in analyzing price and things like that regularly? How often do you put in chart time, not trading time, not going to the chart looking for a trade, but going to the chart to understand what price is doing? That's the key. And if you do that more than going to the chart to look for a trade, you'll be able to identify all of this stuff with ease.
Yeah, personally, I'm beginning to do that, like on Saturdays and Sundays, and like you said, repetition, practice. Yeah.
Yeah. It takes time, and this is not overnight. Trust me, I didn't get here overnight. This came as a result of a lot of loss, to be perfectly honest, because really, I just was not disciplined. I was not. I thought I knew better. No matter, no, price gonna do this. Like, really? Because you said it's gonna do that. That's what it's gonna do. And then I get mad. I'm in the trade. It's going the opposite way. I'm losing all kind of money. Now I'm mad at the chart. Like, the chart has emotions, right? Or like they care. So it just comes with time. For me, I just got to a point where I submitted, and then I had to do the work, the consistent work. And it's just no way around it. There's no way around it. All right, we're gonna wrap it up because I definitely have another meeting after. Now I'm gonna be. Are your eyes open there, Paul? We rolling. We rolling. Okay, so we're gonna wrap it up for tonight. This was a good session. I hope you all got some value out of it. I will download tonight and I'll get it up. You know how I do. It probably be 2-3 o'clock in the morning. Y'all see it pop up in the chat.